Hi, Marcus de Maria here with the first of 17 videos that we are shooting in a series called The 17 Mistakes that most people make, whether they're beginners or intermediate traders, which is astonishing. So it doesn't matter whether you're a beginner, whether you are already trading. Let's see whether you make these mistakes. And any one of these 17 mistakes could be very detrimental to your trading and investing. So let's start. Number one, in no particular order, is, and that's what this video is going to be about, is you must have, let's see whether you have one. Do you have one? A written trading plan. Do you have one? Seriously, don't just say, oh yeah, I know what I'm doing, I know my strategy. No. Do you have it written down? Why is it so important? It's because when the market moves, you might get quite emotional, fear, greed, etc., etc. And it's the emotions that are the challenge when you're trading and investing. Now, if something happens to the market, whether it goes up fast or goes down fast, you might react to it and say, oh, what do I do now? And do something that isn't part of your strategy. But if you had the trading plan, which is written out and is stuck in plain sight in front of you on the computer, you just go, right, this is happening. What do I do? Right, I do this. Especially when you're starting out, this is incredibly important. So what has to go in a trading plan? Here are some of the components. For example, the strategy. Right? So what strategy is it? Is it an oscillator strategy? Is it a trending strategy? Is it on a short-term time frame, medium-term time frame, or a longer-term time frame? Are you a swing trader? Are you an intraday trader? Are you an end-of-day trader? So all of these things need to be written down. You say, oh, is this important? Well, what are you though? Because you need to know with your strategy how to make money. The second part is the strategy itself. So for example, what are the rules? Now you need rules in a strategy. A strategy is made up of rules. Now these are the kind of things you need to be able to cover in your trading plan. For example, where do you get in? Where do you get out? But get out with a loss and also a gain. See, when we place trades, we actually place 3 trades. Get in, get out, get out. Okay? With a win, with a loss, and where do we get in? Now this is incredibly important that you do know that, because you need to know that before you get into any trade. Before you get into it. Don't go in and say, right, what do I do now because the market has reacted? No, you need to know immediately. What's your strategy? If it goes down 10%, are you going to get in again? But you need to know that in advance. You can't do that reacting, knee-jerk reacting to the market. You need to know that in advance. So those were the 2 components. The third one is where to invest. What do you invest in? You might say it's cryptocurrencies, or you might, but which ones? Is it the top 5, top 10, top 20? It might be stocks and shares, but which ones? Is it entire markets? Is it sectors, industries? Or is it precious metals, gold and silver? Or you know what I'm talking about. The fourth component is, so you've got where to get in, where to get out, you've got where to invest in the first place, and then how much money to invest. In other words, what's your risk management? Most people don't have any risk management. And in our trading, we only risk 1% of our entire portfolio. Is that yours? Funds? Maybe 0.5 to 0.75%. People who are extremely aggressive but know what they're doing might be a little bit more. I wouldn't advise that, but you need to know what yours is. I hope I'm giving you some food for thought. I hope you're taking notes, because these are the components of a trading plan. So you need it written down, and you need to know what happens in every instance. So for example, let's say the stock goes up but then goes sideways for a long time. Do you still want to be in that trade or not? What if it goes up really fast? Maybe you have a rule where if it goes up more than 5% in one day, maybe you'll move your stop loss right underneath it, or maybe it's to get out. Because if it goes up very, very fast, maybe it might go down. What if it gaps up? Okay, well, if there's a gap, for example, then what kind of a gap is it? Is it the kind that's going to get closed? Or is there a lot of volume, which might mean it's a breakaway gap? So these are the components that you need to have. And obviously inverse, what would happen if it goes down? Do you move your stop loss down with it as well as it goes down? When do you do that? Do you do it when you've reached a 1% gain? Is that when you move it to 0? Is it when you do 2%? Is that when you move it to your break-even point? Can you see all the different components? Now, once you have that written down, you've got it, right? Most people, do you think, honestly, that most people out there have a trading plan like this? I can guarantee you they don't. And then people wonder why they're not as successful as they'd like to be when it comes to trading and investing. They don't have a clue what they're doing. Seriously, people, you need to know what you are doing. It's very simple, just like driving a car. It's very, very simple, but you need to know what to do. Okay? So, the number one mistake, not the top one, I'm saying number one of the 17 mistakes is not having a trading plan. So, over to you. Do you have a trading plan? And if not, are you going to start right now? Or as Tony says, Tony Robbins always goes, when is now a good time to start writing a trading plan? Get a piece of paper or get onto your computer, start typing it out. Maybe you want to have some examples. I like this as well. Some examples of the perfect setup, some examples of what's not good, what to watch out for. Every single one of those things should be part of your trading plan. Now, there are some advanced things I'm not going to go into here. Maybe we'll do another video, but there are things like your trading environment, for example. Where do you trade? What time do you trade? How often do you... All of these parts need to go into your trading plan. It's your plan. It's a business. Dude, it's a business. It means that you want to make money out of it. This isn't a hobby. This is a business, right? A profit-making enterprise with the market doing all the work, which is why I love it so much. And with any business, you need to have a plan. I'm talking about one page. I'm not talking about 17 pages, but you do need to start. So I'm handing over the baton to you now. Make sure you do that. Write a trading plan so that by the time we get to the second mistakes, let's see whether you make that one as well, that you've already at least ticked that one off, and now you're no longer making that mistake. Maybe you're only making 16 mistakes now, not 17. So I hope you really enjoyed that. Please take action on it. I hope you learned. We are here to help you. Reach out to us because we're here to help you every single step of the way. And always remember, invest with passion and profit.